and chatting with CEO Andy Shape. Stran's stature and promo has been rising of late. The Boston area firm cracked the top 40 list of the industry's largest distributors for the first time last year. It's gone on to grab more headlines by going public in late 2021, making key acquisitions, and hiring high-profile industry executives. Andy and I will be peeling the curtain back on Stran today to talk about all that, plus getting into what the future holds for the company and the industry. Andy, thanks for being with me.
Great. Thanks, Chris. Thanks for having me. Excited to be here today.
Awesome. So before we jump into these questions, I'll just remind everybody who's either listening to or watching this live that you can write in with comments or questions, and we'll try to get to them. So Andy, first question. I think it was November 2021. Stran went public officially. Really interesting thing for an industry company to have happened. Why did you guys do that? What opportunities did you foresee, and kind of what was involved with it?
Sure. So we've been in business for 27 years, and we really haven't taken on any outside investors. And we're really looking at we had seen substantial growth, especially in the last 4 or 5 years, but we really wanted to take it to the next level. So we looked at different areas of how to do that. Looked at going to private equity, looked at getting outside investors, looked at potentially selling, and looked at some different areas, and landed on going public. And one of the reasons why we wanted to do that is we wanted to raise capital, because we could only grow so much with our own capital. So we went out and we found a bank in EF Hutton and started told them our story and said, we've been in business for 27 years, been profitable since the beginning. We've seen double-digit growth, almost 20% year-over-year growth over the last 5 years. And we've got a pretty good story. And this industry, it's a unique opportunity because there's not a real lot of public companies in this
space.
Yes,
totally true. Yeah,
especially on the on a major exchange. There's a few. Bamco's part of Superior, which is on NASDAQ, but after that, there really aren't any. Full Imprint's another one that's public, but they're on the London, and then same thing with Brand Addition, which is part of Pebble, is on the London Exchange. So there's really not a lot of publicly held companies. So we looked at that, and they liked our story. And when we went out and approached investors, they all really liked it. And that's really the genesis of it. So, it's really to accelerate our growth and to use that outside capital, public money, to really form something unique within this industry. And that's what we're looking to do right now. And we just started. So
yeah, it is unique. It is a unique position to be in, being publicly traded, being on the NASDAQ, relative to our industry. And you mentioned an interesting thing there that caught my attention about private equity. Now, we all know private equity money has been, I think pouring would even not be too strong a word. It's been pouring into our industry lately. Why was that not the route that you wanted to go? Why did you ultimately decide against that and to go public?
So we're really looking to build something special here long term. We're not looking for an exit. I mean, I'm interested in staying in this industry. I love this industry. I like being part of it. And we weren't looking to come in and say, let's invest and sell in 3 years. We're looking at trying to build something greater, but while also being able to have some control in that, not really looking at only a quick return on an investment. We're looking at saying we want to build something truly unique, truly special, invest in technology, invest in our infrastructure, invest in our people through acquisition, through organic growth, doing all of that. And also doing it with ourselves. I mean, I've been in this business for 27 years. We have multiple people. Randy Burney, who's our executive vice president, has been with us for 25 years. So, we've been around this industry for a long time, and we really see a tremendous opportunity within the industry to really make a good difference and really build something truly unique and special.
So tell us what the process was like, because again, this is a unique thing for a company in our industry to do. What was it like to go public, and what were some of the challenges involved with that, and how did you overcome them?
It was fairly daunting. So the first thing we had to do was meet with our bankers and tell them our story, and they liked that. And then what we had to do is write what's called an S1, which really it was about a 200-page document that really talks about everything from our financials to what we do, who we do it for, and everything. And it's very complex, and it takes a lot of work and a lot of time. So that took us about 4 or 5 months, combined with auditors, lawyers, accountants, myself getting involved. So one of the things that the struggles with that was some of the resources and time that I took away from managing our business, as well as our CFO and other people. We really had to backfill with other people to do that. So that's one of the hardest parts that we had, was running our business while going public. There's also cost involved with that, but at the end, like I'd mentioned, we raised over 40 million. I don't know if I mentioned that, but we raised over 40 million between the IPO and a secondary capital raise. So, that's really going to help us invest within our company and really invest for that future growth.
Interesting. Now, so I mean, we all probably have investments of various kinds, and we know that stock market it's been up, it's been down since becoming a publicly traded company. Have things changed for you guys? Have you encountered new challenges with just with some of the volatility that can exist in the stock market?
Yeah, so there's two things that we look at. Is one, the share price of the company, and right now we don't feel like the share price is indicative of the true value of Stran. Right now we have over 30 million in cash in our bank account, and our market cap's about that. So we're trading what we feel is below market value, but the share price is really only short term that we're looking at. Obviously, for our shareholders, we're looking to increase that value, but it's through delivering value in Stran as a business, not on just the share price. So it's, for making some announcement or doing something that doesn't have legs behind it. We're really looking at building that. So in terms of some of the things that being public has done, it really has made us be a lot more disciplined. And that's one of the benefits. It's one of the things that's a lot more work, but I really find that it's a benefit, like a benefit to us, because we have to be disciplined about our financial accounting, our strategy, where we're spending our money, how we're spending, because we're under the spotlight, and all of our financials are published every quarter. By May 15th, we'll have to publish our Q1 earnings and reports of what we've seen. But on the other hand, it really forces us to look at that and say, how are we going to grow? How are we going to add shareholder value? And it's really just a change in attitude of saying, we raised all this capital. Before, there's a lot of people within this industry that have a great lifestyle business. That's what we had before too. They make a great living here. They have a great lifestyle, and they say, do I want to grow? Do I want to risk my own money to grow? Do I want to maybe buy a new car or a vacation home? People have those thoughts, and there's nothing wrong with saying, I'm pretty comfortable with where I am. I don't want to reinvest that and take the risk. We don't have that luxury anymore. We have this, and we're saying we have to invest that money. What are we going to do with it? How are we going to grow? How are we going to deliver shareholder value? How are we going to make Stran more valuable? And that's really what we're doing. So I think that's been, a lot of pressure, but it's also challenging, fun, and really is why we did this and what we want to do.
Hearing you talk, it sounds like it's good pressure. We talk about bad pressure. It sounds like it's good. Like it's pressure that forces a certain, and not that you weren't focused before, but even a greater intensity of focus on how to really grow and how to really be strategic. And if you navigate that right, you come out ahead in the end, because there's no way you can't get better if you're looking at it that way and kind of approaching it in that right way.
You recapped it better than I could have. So that's exactly what it is. So it's pressure, but it's good pressure, and it's exciting. Like a lot of the stuff that we've said for years to our employees, like, hey, we want to do this, but we can't. Like we have to wait, or now we're saying, like, we're doing that, and they're saying, wow, we actually are. Wow, this is amazing. Like we're actually doing these things that we've always said we'd love to do, but we couldn't take the risk or afford to do it. Now we're saying we're doing it, and we're already seeing the results and the return on that investment that we're making. So within our company. So
kind of dovetailing off that, you've made a number of notable acquisitions of late. I remember when you guys first went public, you kind of came out clearly and said, we intend to use some of this capital for acquisitions, and you have put it to work for that. So can you tell us about some of those acquisitions? Who you've acquired,
Sure.
Why, and how they've just helped you, Stran build?
Yep. So we've done in the past, just under 2 years, under about 18 months, we've done 2 acquisitions. One was before we went public. We bought a company in Warsaw, Indiana called Wildman Imprints. It was a division of a company called Wildman Business Group, which is a uniform company. So they do like uniform and laundry service, but they had a division, a promotional products division that they had started about 20 years ago, but it wasn't their core business. And they made a conscious decision, Wildman Business Group, that said, we really want to concentrate our business on the uniform. And we don't want to take those resources and use it towards promo. So we want to divest of that, but there's value in it. So we want to find someone who can maximize that value. So we approached them and we negotiated an acquisition of an asset purchase of that group. And it was about 21 employees who we brought over, about 10 million in revenue, spread out about 1,400 customers. In addition to that, they had about 120 online stores that we brought over as well. So it's a lot of annuity business. And that really was great because first, the people that we brought over are fantastic. We opened a new office in Warsaw, Indiana. We brought over all their employees, all 21 employees. The majority of them are still with us, almost 2 years later. And it really allowed us to expand our footprint within the Midwest, as well as look at some of a different way that they're doing some business and make improvements to that, as well as adopt some of their best practices. So, that is part of our acquisition strategies. We're not coming in and saying, we're going to come in and cut heads and increase profits and get rid of everyone. We're saying we want to go in and identify people, what their strengths are, and really give them more support and give them more resources to go and take that $10 million worth of business that we acquired and really turn it into, say, 15 or 20 million over time. So, that's really our structure that we're doing. That's really what we're looking to do with acquisitions, is not just come in and say, I have a bunch of disparate companies that we're trying to cut costs and buying revenue, really trying to make a difference and integrate them. So that was the first one. I think we've done a really good job of integrating the culture, making them feel part of Stran. It was a lot more difficult than we had wanted because it was during COVID.
Oh boy. Yeah. Talk about a variable.
Yeah. So that was very hard. Like we wanted to have them out, all their employees out here to meet our people and go out there. We had an open house scheduled that got canceled because of COVID. Mm-hmm. It was a little bit more difficult for that in-person communication, but I think we did a really good job virtually. And now we started doing a lot more of that travel between right now and really integrated that. So that was our first acquisition that we made, our first large acquisition. And then in January, we acquired a company called Gap Promotions. We're a Facilis member. They're a Facilis member, which was great. And we were introduced to them through Facilis. We've known each other.
Facilis had I'm sorry to interrupt you. They had a new program, I think, that they debuted that was actually looking to help with those kind of connections. Did you guys leverage that? Did you work through that?
Before that, we did not. This acquisition wasn't part of that, but we're in constant communication with them about identifying people who maybe want an exit, people who want to, join our team, that want to accelerate their growth as well, that maybe have something unique. So we're definitely taking advantage of that, because I do find Facilis a very valuable community. Mm-hmm. We didn't originally sign up for the community when we were being pitched by Facilis. They said, "Oh, the community," and we said, "I don't even know what that means." Mm-hmm. And then once we and what's even greater about it is I feel that way about Facilis. And again, we joined in February 2020, right before the pandemic. So we never really experienced the true community like Facilis, and we still feel that way. So that's been a nice surprise from Facilis since we joined that. But in any case, Gap was a business started by a woman, Gail Perano. She's great. She's part of the acquisition. She's continues to work for Stran. I've been meeting with her later today. She's great. But a lot of what they concentrate on is the beverage space.
Yeah.
Some different beverage offerings. So they have
huge names, like the biggest. So that's some of the biggest names in adult beverage industry.
Yeah, exactly. Molson Coors is a big one of theirs, and a lot of other alcoholic brands. And they spend a lot of that. I mean, some of those I laughed during COVID. Some of that were like, yeah, we, booze, gambling, and lawyers. It didn't go away.
It's not a bad niche to be in during tough times.
Right. So a lot of that business came our way. So we were introduced to Gail through Facilis, and really brought them on. They had 13 employees that we brought on, great employees. They're a young group that has a ton of potential, like amazing amounts of potential. So we looked at that acquisition saying, boy, Gail's done a really good job of establishing a fantastic foundation with really good customers. But she was limited again to what she could do. She wanted to put more money into the business, but she would have to, use her own money. So she really came to us and said, I want to continue to grow this. And we're helping her do that by putting more resources on the accounts that she has, more creative, more technology. And that is a big area of what we're doing is the technology investment to make it easier for customers to do business with us. And, she looked at that and said, this is a really good strategy for both Stran and Gap and all the employees. So, that's been a really successful. We closed that January 31st. So, they've been with us a few months and it's going really well. So
awesome. So as you're acquiring, as you've gone public, all these different things are happening. You've also brought on some pretty, for the promotional products industry, some high profile executives. Can you tell us who you've brought aboard and kind of what their roles have been and how they're kind of helping you build the next phase of Stran?
Yeah. So what got us to, $45 million or $50 million really isn't going to get us to the next step. So we recognize that, and that's why we went and raised capital. Mm-hmm. And in addition to that, the current infrastructure that we had leading up to that isn't going to support the growth that we needed. So the first thing we needed to do is build out our infrastructure. So, I approached Steve Paradiso first from an operational standpoint, and he had retired. Mm-hmm. I don't know if anyone's familiar with Steve Paradiso, but he actually was the president of Cirque, which got to be, was a publicly held company, got up to almost $1 billion in revenue. His claim to fame is he said he had to ask O.J. Simpson to retire from the board of Cirque because of some bad things that were happening with him.
No comment.
But no, we brought him in and I started talking with him and he was in retirement and said, nah, I don't really, I'm not interested in coming back. And I told him what we were doing. And he said, boy, that's really a great story. I want in and what he's now our chief of staff. And really what he's helping me with is getting the right people in place, holding people accountable, establish our infrastructure to handle the growth and to really attract the right people to really help our growth and help our people when they're here working to say, we're looking towards, building something that's at Stran that's really a true leader. How do we do that? How do we put it in place? How do we make sure that everybody's happy at work and not, feeling all that pressure as well? That pressure, I may have a lot of the pressure, but we don't want to try to put too much of that on our employees. Mm-hmm. So first hire was him as our chief of staff, and he's been amazing at really setting up a corporate rhythm, getting our management in place, really getting, all of our ducks in a row to hold everybody accountable to specific tasks. So before, when we were smaller, I started this business. So I've done everything from, teach myself how to use Illustrator and Photoshop to looking at, how do I create an online store using, different Bright Stores, Core Expand, Magento, Shopify. Like there's a million, doing all of that to accounting, to billing, to using, every ASI product I think I've used.
You take the trash out too, right? So
yeah, exactly. Yeah. So I've known all that, but on the other hand, now that we're growing, like we need to put people and compartmentalize people and say, here's what we're really holding you accountable to is to drive this. And he's been really good at helping us establish that, to hold people accountable to, this is what we need you to do. And if you're doing other things, we'll hire other people to do that. It's given us, and going public and raising capitals, given us ability to do that. So Steve was the first hire.
And I'll just add real quick, Steve, of course, was long time on Counselor, ASI Media's Power 50 is one of the most influential people in the promotional products industry for roles that he's had. So he's a big name guy to bring on. Yeah,
and he also was at Touchstone and ePromos and really helped them grow to be a top 40. Both were doing, I think, in the $75 million range. So he helped establish that. And now he's really helping us to try to continue to grow ourselves. And he's done a really good job. And he's been super helpful to Stran and myself and the entire organization. And as a result of Steve, I originally was talking to Steve from an operational standpoint, but he came in as chief of staff, and he had referred me to Sheila Johnshoy, who recently started about 2 months ago from an operational standpoint. And she's amazing. She came from Swag Up, and before that was at ePromos and Harlan Clark. So she's been in the industry for quite a while, but super sharp person who's has a really good operational mind, is getting a grasp on all of our programs. Right now we have, I think, over 350 online stores that we have. And she's helping to wrangle them to make sure that we're billing them properly, that all the operations, that orders come through, that our staff is staffed properly. So she's really good, and I'm really excited about her. And in addition to that, we hired a new CTO, Jason Nolly. Again, he was with Wildman Business Groups. So that's how I originally met him. He ended up getting another job And after he got that job, we went and kind of recruited him and said, we were really impressed with him during the Wildman phase and said, boy, what do I need to do to get you over here? Because he's super smart from a technology standpoint, is implementing some new really interesting and cool platforms and systems that really make us more efficient. And, that's a big part of the future. And, I know we want to talk a little bit more about the technology, but he's really an integral part of that. And then to round it out, our CFO, Chris Rollins, who we promoted to CFO, he was our VP of sales for about 6 years, and we promoted him to CFO, and he's really stepped up to the challenge. Now he knows more about SEC regulations than anyone would ever want to know.
Oh God! All right. Yeah.
So he's been great. And then our VP of sales, Steve Urry, is another leader that we have that we put into place that's helping manage our sales team. With the help of our executive vice president, Randy Burney. So we've put a lot of people in place, and we're continuing to put people in place, but those are the main leaders that we've put out there.
All right, interesting. So you have you have a good core team that you had there. You've expanded leadership to kind of help take things forward. So I guess the question becomes, what are you going forward into? How is the industry going to change over these next few years? What do distributors need to do to compete in what seems to be a pretty quickly changing landscape, if you will?
Yeah, so there's a few things. And when we talk about technology, people always say, oh, well, technology, what do you mean? Like, what are you doing for technology? And there's a couple of different things that we need to look at from a technology that we're really investing in. The technology is lead generation and really getting more eyeballs on Stran, using technology for our advantage, to our advantage for that. So getting more people interested in Stran, showing what we can do, but that's really only the first step. The next step is, once we have customers, we're not looking for a one-time order where someone comes in and says, I need to order 1,000 pens. I'm going to go online and do that. That's not our direct-to-consumer model. That's not our real model. Our real model is more finding customers and large clients that say, we want to use this form of advertising and marketing as an effective medium and put it into their advertising budget, because it is highly effective. And I think that's one of the trends that I think that when we get in with our customers, they really start to recognize is, wow, this is really impactful. This is really effective when we do it properly. If we buy a bunch of stuff and stick it in our closet or in the trunks of people, or don't give it out with any type of rhyme or reason, it may not be as effective. Yet if we have a plan, we help them establish a plan on how to use this form of advertising, it's very effective. It's one of the only forms of advertising that doesn't take away people's time. You go to watch a video on YouTube, they take away your time. Television ads, they take away your time. When you're reading a magazine, there's an insert, you rip it out. It's all taking away from you, versus in our industry, when someone gives you something as a gift, as an incentive or something, it creates that favorable impression of that brand, because they're actually going out of their way. They're giving you something that's branded, that's meaningful, that means that. So I think that the more that we can get in front of those advertisers to say this is an effective form of advertising, and give them the technology tools to then give access to those products to their field or whoever's using it, or their consumers or whoever is, give access to that, as well as give them visibility into, are we getting an ROI on that? We spent $1 million on this program. Who did it go to, and what does that look like, and was that effective? And when we can show that to our customers, they say, boy, this is a lot more effective than some of the digital advertising that's seemed real sexy and hot at the time. But
so let me stop you there, because I think that's such a good and important point, is that what you're really talking about is having ways to capture ROI, is using technology in a way that allows you to capture demonstrable, if you will, ROI to clients. It's instead of, it's just like, hey, I sold you t-shirts, my job's done. It's like, hey, I created this campaign. Here's like stats and data on how that worked, and here's how we collected that. Like you're talking about stuff like that.
Yeah, absolutely. Integrating it in with whether that's their CRM, their ERP, so they can say, well, all right, let's look at these different, like if it's a sales initiative that they're doing, they said, let's look at these different salespeople. This salesperson sent out this amount of merchandise to people, and look at their numbers. This person didn't. There's a correlation between the two. Now let's try to prove that out, that that's a cause effect rather than just a correlation. So then they say, let's do that a little bit more and say, we have found that when you do this, it does make a difference, like from some sales initiatives. So using that technology, again, not just to say, oh, I'll use the technology to search products or to get you interested in doing business with us. It's really to show we'll help you accomplish your marketing goals through our technology offerings. Mm-hmm. So that's really what we're investing is try to be unique and different so that when these people when our customers are looking and saying, I want to do something, I want to create loyalty, brand awareness, I want to create employee engagement, I want to create an incentive program, whatever it may be that they're trying to do, is give them the ability to do that through products. And products are so valuable and important, and they can't be digitized. Like, mm-hmm. sending an email isn't as effective as handing somebody something. So we're really working on that technology to go and have that complement the products, not to replace the products, but complement the products so that it's more effective marketing use rather than just selling products and saying, hey, you ordered $10,000 worth of baseball hats. I dropped them on your doorstep. Good luck. We want to create, let us do more than just do the hats. We'll get a really cool hat for you. We'll do some great decoration. Maybe we'll import it. Maybe we'll do it direct, or maybe we'll do it domestically. We'll do some creative ways. Maybe we'll do insert a hang tag, whatever it may be. And then let us combine that with some printed collateral or kit it with a box and mm-hmm. send it out and make a difference. So that's really what we try to do, and doing a lot of that through technology.
Yeah, and I think that one of those last points you made there is good, because sometimes people hear in our industry technology, and if you've been in the industry a while, there's almost a sense of like, oh, are they talking about depersonalizing the process? And no, that's not what it's about. It's still very important to have that sales consultant there helping to craft the campaign. It's just now I'm giving you data points to support things that I'm suggesting to you, or to demonstrate to you how campaigns have worked, and giving you, actual statistical insights that can help us craft the next one together. So the technology is not displacing a salesperson per se. It's a tool, an important tool that salesperson can use to be a better consultant.
Absolutely. And then, I said there's three parts. One is getting more interest in Stran. Two is providing a platform and different technology services to our customers. And then the third one is creating efficiencies internally at our company. Mm-hmm. So a lot of, I always say, imagine if Amazon followed the traditional ASI method, mm-hmm. Where someone would place an order and they would have to go find, you go in to order a shampoo, and they'd have to go source it, cut a PO to the vendor, bill them, and do all that. They wouldn't be able to exist if they had to do that manual process. So really on the back end, what we're trying to do is make it easier for our automation to go through so that people aren't spending as much time on our back end as they are manually processing orders. So, it's really combining all that together and trying to create a more efficient working process, as well as giving valuable tools out to our customers that makes it more efficient so we can spend more time and more of our valuable resources. I mean, listen, the biggest cost for almost every ASI distributor is human capital. Mm-hmm. The people that work for us. Everyone says, "Oh, we love our people, and that's what's important." I mean, if you look at anybody's P&L that in our industry, that's going to almost always, unless there may be a different model, that's almost always going to be their largest expense. So we want to make sure that we're getting the most efficiencies out of them, and give them the tools to succeed. So that's really what, the third part of the technology.
All right, interesting. Since we're on the subject of technology, we did have a question come in. It's a little out of left field, but it's kind of interesting. So see if we could answer it. So the questioner asked, what do you think about accepting crypto as payment for promotional products, as the crypto industry is growing massively and they need swag too? So any thoughts on that? I mean, no right or wrong answers. Just what's your take?
Yeah, no, I would welcome it. I mean, it's one of the things, one of the issues that we may have is from a compliance standpoint for being a publicly held company. That's the only issue that we have. And I'm not opposed to it. I mean, I've been involved in blockchain companies in the past and crypto, so it's not anything new to me. But for us, we don't want to come out with a press release that says, "Hey, we're accepting crypto as a payment," just to try to make noise. I mean, we'd accept it, but and if somebody says, "Hey, we want to pay you with crypto," we would explore that and accept it, but or maybe not accept it, but explore that and try to do everything that we can. It's not a huge initiative for us right now, but that is something that we're looking at right now, is the future of what is the meta. Facebook changed their name to Meta. The metaverse, companies are investing billions of dollars into the metaverse. We are exploring that. We're looking into it. We're not ready to launch anything or really announce anything, but we are exploring that and looking at ways to make sure that we're leading in that area. And that's one of the things, as I mentioned with Jason Nolly, that he's highly interested in and exploring right now. We just don't have anything publicly official that we can launch with that.
Yeah, that's interesting. And I do think more larger forward-looking company distributors, I should say, in our industry some are already getting into it to some degree, and it seems like a new adjacent channel that a lot will look to start operating in.
It is. So that's in the back. So that's in the background for us. So where we look at this is we say this is a $23 billion industry. It's crazy, like that. This is $23 billion. The largest market share is 3.3%. It's the largest market share. There's a tremendous opportunity within this industry itself of what we're currently doing. That doesn't mean that we're not looking at that, but we want to first tackle the low-hanging fruit of saying this industry is really has a ton of opportunity, and we want to capitalize on that first, while also having that as a side project. But we don't want to come out and say this is our new strategy when there's tremendous opportunity with what's right in front of us.
That's a great point with the market that fragmented, as you kind of put there. There's a lot you could do just in your core business model to make a lot more revenue.
Yeah, again, it's not like we're not looking at it. It's just one of those that it's not a core tenet of ours. Like, hey, this is what we want to do. It's saying we have to be prepared to do that. We're doing the research. We're doing the investigation. We're making the investments into that, but nothing that's publicly that we're sharing publicly with anybody.
All right, I had another question come in. It's kind of an interesting one. Put you in the driver's seat a bit. This is from a supplier and says, what's the best thing a supplier can offer or do to help you and your team sell more effectively? It's a great question.
Sure. So I think the suppliers really need to continue to communicate, and that's the biggest thing. Like right now with the supply chain being where it is, I mean, I think one of the stats that we came up with is what used to take us 1 touch now takes us 7 touches. Wow. So, we need to, because before, like if somebody called 3 years ago and said, hey, I need something for an event in 3 days from now. Can you get it for me? We'd say, yeah. And then we'd go make it happen. That doesn't really exist anymore. We'd say, yeah, we'll do everything we can to make it happen, but we may not be able to get exactly what you want. We may need to shift our gears a little bit. So that communication from a supplier base is really, again, the one that I think we need the most is giving alternatives when they're out of stock, when they can't deliver something, rather than just coming and saying, hey, I have bad news for you. I can't do this for you. Hey, I've got bad news for you. Don't wait. Come back to us. Tell us the bad news. I have bad news for you. But come back to us with some alternative solutions. Rather than just saying, sorry, you're out of luck. Come back and saying, hey, I really apologize. I know your client's not going to be happy. I know you're not happy. But we don't have the AS5437 in purple, but we have it in blue. Would they be okay with accepting that? Or we don't have that item, but we have this item that's very similar that maybe costs a little bit more, and also being reasonable with that and saying, all right, maybe we'll work with you on the pricing on that because it costs more. Maybe we'll give you a discount to make it a little bit more, palatable.
Your trouble, so to speak.
Yeah. So let's work together. And, we look at we look at the supplier base as a partnership. I mean, we really do. We rely on them. This is one of the few industries that still has that supplier and distributor aspect, and we rely on one another. So, we respect and really want to continue to promote our suppliers, especially the ones that look out for us and are doing, trying to help us succeed. So, communicate with us and really give us alternatives if something goes wrong.
Yeah, and I'll just quickly add, any executive frontline salesperson on the distributor side that I've talked to through the last 2 years, and especially the last year over with all the supply chain craziness, have said almost verbatim, what you said, like just communicate clear and quickly what the status is. If if there's an issue, that's okay. Let us know right away, and then give us some ideas about how we could actually still come up with some kind of solution. And if you do that, I think it just creates a lot of goodwill, if nothing else,
Yeah, it shows that you care too, and I think that everybody wants that. And we were talking about getting rid of that human touch. Like, we're not trying to do that. We want to, get rid of unnecessary human interaction that is just minutia, but we want to still have that personal touch where we understand the brands that we're working with, we understand their goals, and they know that we care. Like if they have something that they're, I've been to trade shows and been standing there with no backdrop and no booth and no giveaways, and you're going, boy, I feel stupid. We don't want anybody to feel that way. We don't want that. We want to say, hey, you show up at an event, which are coming back, which is fantastic to see. we want to say we know that and we care. So we want our customers to feel that way. And I think that the suppliers can do that too. If they feel like, hey, we don't want to let you down because we don't want to let your customers down, it goes a long way.
Got it. All right. We have one more question come in, and then I'll give you one final one. We're kind of pushing up toward the end of our time here. Interested. What the question is? Do you see China import becoming less attractive long term and made in the USA kind of being on the rise? I have some opinions on this. I'm curious what your take is as a distributor. Like, are you here? Like, do your customers want more made in the USA, or is it still more price driven? Like, what are you hearing?
I mean, we did that project for the U.S. Census 2 years ago that was all made in the USA. It was about $20 million worth of merchandise that had to be 100% made in the USA, and we had to be audited to make sure that it was completely made in the USA. And it was a struggle because some of the items we couldn't find. Mm-hmm. They said, oh, we want to do a silicone phone wallet. Mm-hmm. Maybe it exists in the USA, but we certainly couldn't find it made in the USA. So there are certain things that we just can't do. So, yes, I do think, more people will turn to USA. But on the other hand, USA factories are struggling as well because of people not coming to work, and it's just harder to find. Minimum wages going up in a lot of the manufacturing areas, and people are that's a struggle as well. So I do think the reliance on China may go down. I think importing will still always be very important to our industry. But, I think it's a balance. And really what we want to do is bookend that production, is take advantage of that when we can, but not rely on it. And that's really what we try to do, is say, if we can take advantage of cost savings, if we can take advantage of customization because we have the time or we have the forethought for it, let's do that. But let's not rely on that. Let's have alternative solutions domestically that help us accomplish those goals. So if that's what we really try to balance.
Yeah. And I would just chime in quickly to say, I don't think that, as you mentioned, international supply chains are going to be displaced by a domestic model anytime soon. There's a lot of reasons for that. Price is at foremost, but also just infrastructure and labor levels needed to really support our industry en masse. It's just not realistic that USA production is going to displace stuff from overseas anytime soon. So I agree with you there, Andy. So one last question, hopefully a good end on a positive note here. Just from what you're experiencing at Stran and maybe what you're hearing about from colleagues in the industry who are distributors, do you get a sense that this year is going to industry wide now, not just Stran, is going to be an improvement over last year's sales? We had a nice bounce back after a very difficult 2020. Do you see us growing as an industry again this year? And if so, what would you maybe put the ballpark range in?
I do. I'm not sure if we'll get back. I do think it will grow, but I don't think it's going to get back up to 27, 28 million. Last year was 23 million. The year before was 25 or 20 billion. Sorry. I do think that the beginning, or I think we'll see it, but I don't think it's going to come as quickly. So I think my prediction is we'll see a little bit of growth, back to around the $25 billion range. And the reason why I think that is, I think that a lot of advertisers started to recognize they still had the budgets. Like, a lot of companies actually did very well during the pandemic, and they still had their advertising budgets, and they were, rather than using them for some of that budget for events and different things for in-person meetings, they did things like kitting, sending things to homes, doing things that were a little bit different. And they found that, wow, that's really effective. So I don't think that's going to go away. So some of that spend went over to there, and I don't think that's going to go away. I think that's going to continue to increase. But with the addition of now having in-person events, having trade shows, having people go on sales calls and going on meetings, I think together combined is going to even grow our business even more. So 2022, I think we'll see an increase, but I think 2023 we'll see an even greater increase.
An even greater one. Okay. Yeah. I tend to agree with you. I do think we're going to be up again this year. I mean, of course, barring anything unforeseen, and we know we've had some unforeseen things over the last few years for sure. But, I do think the trend is up, even with some of the economic headwinds that have been blowing because of global events and supply chain. I still think there's a huge and growing demand. And I think the return of something approximating what we'd call normal life, pre-COVID is going to be nothing but good for our industry. So I do think we're going to be up as well, and hopefully in that $25 billion range again. So Andy, thank you so much for being with us today. It's been you've been so candid. I really appreciate the insights, and it's been exciting to hear about where Stran is and where it's going. Just any kind of final thoughts for our audience?
No, I mean, I think Stran's in a very unique position right now, and we're looking to acquire other companies. So if anyone's thinking, I'm ready to formulate an exit, or I want to be part of something that's growing that really is unique, I'd welcome the opportunity to talk to us. We're building out our infrastructure. We really want to build something truly unique in this industry, and we're looking for those people. So anyone who is interested, reach out to me, reach out to anybody on our team that and we'd love to hear from you, because again, I think Stran will be top 20 distributor before you know it, much quicker than I think most people would expect or even recognize. So we're looking for people to join us on that, and we got a great group of people already, and we want to add additional people for that. So I'm excited for the future of this industry. I love this industry. I love what we do. I love what I do as a business, as what we do for a business, and looking forward to what's going to happen in the future.
All right, some bold predictions there, and it's going to be interesting to watch this story continue to unfold. Andy, thank you so much for being with us today. That's Andy Shape, CEO of Stran Company. Keep an eye on them; they're on the rise.
All right, thanks, Chris.